Hi guys, it's Selma and Dennis. Hi, good Dennis.
Hi.
Hi. So we're on this trip. We're going to a show, and we don't really come to the strip that often. You would think all the people that live in Las Vegas, they go to the strip, every day. They live on the strip, but we don't really come here that often. How often? Be honest.
Honestly,
Yeah.
twice a week.
Come on. I don't remember last time we were here. Sometimes we have clients that we show the high rise condos, but sometimes we just come here to have fun and shows, restaurants, bars.
Get drunk, waste it.
No, we don't do that. No. Okay, anyways, what are we talking about today? Today we're going to talk about what do you need to get pre approved for a mortgage. So if you're not rich, I'm not rich. No.
Most people are not rich.
If you need a mortgage, if you don't have $300,000-$400,000 cash in your pocket, you're gonna need to get pre-approved for a mortgage, and the process is not that difficult. So we want to break it down. So what do you need to get pre-approved? You need income, you need credit, and you need some money saved to pay for the cost of buying a home. So when it comes to income, the lender is going to look at the last 2 years of tax returns. And they're going to look at your bank statements. They're going to look at the most recent months of bank statements. And then they're also going to look at your most recent pay stubs. They're usually going to look at the last 3 recent pay stubs. If you're independent, if you work for yourself, they're going to look at your 1099 forms. And in general, they're going to look at anybody's bank statements because they want to see what kind of deposits you're making, how much money you're spending. So they're going to look at your what's called the debt to income ratio, how much debt you have and how much income you have every month. And that's going to determine if you can get pre-approved for a mortgage right now or not, or if you need to pay off some things. So the second thing is credit. The lender is going to run your credit and they're going to see if you can get pre-approved for a mortgage or not. And the minimum credit score that you need is a 580. And that is surprising to some people because a lot of people that come and talk to us, they think they need like a 650 or higher. You can actually get pre-approved with a 580, but it really depends why your score is lower. So if it's a lot of negative items like late payments, collections, that are causing your credit score to be lower, then we might not be able to get pre-approved right now, but we need to work on your credit first. But if you're, let's say, if you're new to the credit game and you barely started using credit cards, or you got a car loan a year ago, so your credit score is still building, then you might be able to get pre-approved, and we just need to build your credit a little bit. So the third thing is you need some money to pay for the cost of buying a home. The main costs involved in buying a home are the down payment and the closing costs, and some extra costs for like doing an inspection, an appraisal, and so on. And we're going to talk more about the cost of buying a home in the next video. But for the down payment, if you're getting an FHA loan, which is the most common loan, then you're going to need 3.5% off the overall purchase amount for the down payment. If you're getting a conventional loan, then you need 3% down, and for a VA loan, you need 0% down. You just need some money for the closing costs. Now, the closing costs, they're typically between, I would say, 2 and 3% of the overall purchase amount, and they're gonna be on top of the down payment. And what else, Dennis?
I've been distracted because there's a lot of lowriders. We have a lot of homies on their bikes right now.
It's fun to drive on a strip, right? We're passing the Flamingo right now, and then we're gonna be close. Okay, on the other side is the Caesar Palace. Anyways, so here are some exceptions. Let's say you're in school and you were in school and you just graduated and you started your job that you went to school for, and you're on a salary job. you can actually buy a home. You
Yes.
don't have to have 2 years of working on the job, because listen to this. This is what the lender is going to do. They're actually going to take your education. Let's say you went to college for 4 years. They're going to take the last 2 years of school as proof of work history, because obviously you were studying for your career, so you went to school, and now if you are on a salary job, if you can prove that you're going to make a certain amount of money in the next year, 2 years, 3 years, then that can be sufficient to get pre-approved for a mortgage. And I didn't know this before I started doing real estate, so that's really good news. And then another exception is if you have a big gap in your employment. So let's say, during COVID, a lot of people got laid off and they're getting back to work. If you have been back to work for at least 6 months and you are working in the same industry, same job, it doesn't have to be the same employer, but it has to be the same type of job, and you can prove 2 years of work history before the gap. So let's say you are working at the casino. A lot of people here in Vegas work at the casino. Let's say you've been back for 6 months and you were laid off for a year, but before that gap you were working there for 2-3 years at least, then you can also get pre-approved. That's good news, right?
Yeah, it is.
All right, guys. Well, those are the things that you need to get pre-approved for a mortgage. And if you have any other questions and you're local here in Las Vegas, give us a call. We would love to help you. And we're going to be doing another video that's going to be talking about the closing costs and what exactly is involved in the down payment, closing costs, etc. All right. See you guys on the next one.